I recently took $50 and turned it into over $3,500 using this exact step process of growing a small account into a large one that I'm gonna show you. We're gonna go through this step-by-step process of what you wanna do right now and how you wanna grow it over time. Now, the first thing you need to do is find a trading platform that you like. I highly recommend going with the major ones. They're pretty much all competitive across the board with fees, but don't go with the small one. A lot of the times those are scams. The two big ones I recommend are TradingView and NinjaTrader. NinjaTrader I have used for over 5 years now, and they've recently started trading competitions to where you can enter for free and get prize pools of up to $400,000. And this is just demo trading. Now, the problem with trying to start a small account of, let's say, $500 or less is you run into the pattern day trading rule a lot of the time. And what this means is that you need, at least to trade stocks, is you need over $25,000 in your account to be able to trade more than 5 times in a rolling 5-day period. And so basically, as a day trader, you can't really trade that often because of that. And so I actually realized over time, trading options, Forex, crypto, pretty much everything out there, futures were actually the best thing because they were simple. I always traded options and they were super complicated. Futures are super simple. They're basically like stocks. You buy it and it goes up, you make money, and you sell it, it goes down and you make money. Versus something like options, it's very, very complicated even once you understand them. Now, futures are a little bit more complicated than just stocks, but they also allow you to avoid that pattern day trading rule. You can trade as much as you want as day trades with a $500 account. So it allows you to start small, but also get crazy amount of leverage. Futures trading has something like 450 times leverage. And so this allows you to start small, but grow it really fast, just like I did recently in that challenge where I took $50 over about 7 trades and turned it into $3,500. The leverage that you actually have access to is insane. But if you trade it properly, you can protect yourself as well. Now, the next thing is risk reward ratios. When you start out trading, do not fall in the trap of trying to go for a high win rate. 95% win rate sounds really good, but majority of the time with those strategies is they are a really bad risk reward ratio. Is you're going for a micro movement of, let's say you risk $100 and you go for making $25 in profit. So your risk reward ratio is inverse or negative. It's 4 to 1, where you're risking $100 to make 25. And when you win, you make a tiny amount of money versus when you lose $100, which wipes out 4 wins. And I fell into this trap when I first started out, and it really, really messed me up. And so I highly recommend is flipping that and instead at a minimum go for a 1-to-1 risk reward ratio of you're risking $100 to make $100, or up to higher ones where it's 1 to 3 where you're risking $100 to make $300. This really puts the math in your favor, and also that takes the pressure off of every trade having to work out. Even if you're in a hole of 4 or 5 losses in a row, but if you have 1 win, you're almost back to break even at that point. And when you do win, it pays off a lot more. But because of that, a lot of the time your win rate is something like 30 to 40%, which doesn't sound very good, but in the math and world of trading, win rate doesn't really matter by itself. You have to know someone's risk reward ratio and how much they're getting on average per trade. And so really focus on that and understand that in the beginning, it's not all about win rate. Now, the path to growing your account is really important. I highly recommend getting futures and getting NinjaTrader and starting out on a demo account. When you first start out trading, it's really exciting. You could make a lot of money, but likely you lose a lot of money. A ton of traders come into the space excited and they trade something like futures and they lose a ton of money right away. And what you need to do is demo trade and find some consistency with a strategy for, let's say, 1 to 2 months. And then from there, move on to trading real money. But again, start out small and treat trading and focus on the process when you first start out. Don't focus on the money, because when you first start out, you're gonna be trading a small amount. You're gonna see all these traders on YouTube making thousands, and you're gonna have that FOMO. But what you don't realize is they have spent years practicing and starting out just where you are with a small amount of money. And that's the power of trading, is you can master one strategy, and if you can make $50 every day with it, well, you can scale that to $5,000 every day with it. But it takes time to get that consistency and move up through that process. And so that also goes down to another big rule is do not focus on daily goals and profit targets. Do not go into every day with a daily goal of making, let's say, $100 a day, or I'm gonna go for 3 trades today, because what this does is it sets pressure on your trading to perform. And when it comes to the market, is you can have days where the market is great and you get 10 trades in one day, and days where you just sit on your hands and knees and you don't want to do anything today because the market just sucks. And if you have a goal to make a certain amount of money or take a certain amount of trades, you're going to end up forcing a trade on a bad market, and it's going to lose you more money. Now, when it comes to scaling your account and doing it properly, I highly recommend, let's say you have $1,000 account, is risking no more than 5% of your account per trade. Because what this will do is you could go on losing streaks, and if you, let's say, lose 5 trades in a row, you will lose up to 25% of your account. And that is pretty big, but it's manageable and you can come back from that, especially if, let's say, on a win, you're making 3 times that, you're gonna make 15% return. And so what this allows is you to go through the ups and downs of the market and trading. When you first start out, you're gonna make losses and you're gonna make mistakes. And if you're risking too much of your account at once, you're gonna blow it. And so I even suggest risking less than 5% if possible. When you start trading futures and trading the micro futures, you can risk as little as sometimes $20 per trade. And so that would really allow you to start out really small when you are trading real money. And from there, you can slowly scale once you get your profits going. Now, a huge trap that everyone falls into trading, and I fell into it for years, is you'll jump into a video like this and you'll find a really cool strategy that seems really good and you'll practice it for a while. And then it won't really work out for a while, and so you will instead switch to another strategy. You'll look for another video, this strategy seems good, and so you'll try it out. But the problem is, trading, there are infinite ways to trade in the market. And so what everyone is doing, someone can be trading a strategy that works for them, but it doesn't necessarily work for you. Or everyone's just trading strategies that works for them, but they've spent years mastering it. And there are so many videos, and even mine included, that make the strategy look really easy at a glance. But when you try and execute it day in and day out, there's a lot of little nuances that come together that make you consistently profitable over time. And so that's why you have to stick to a strategy. Otherwise, you'll get stuck in something that I call the learning loop, and you'll just be jumping from strategy to strategy over and over. Instead, when you're first starting out right now, try and focus on not just a strategy, but really just mastering the market structure and mastering technical analysis and just reading what the markets do. If you're gonna jump into trading futures, focus on just understanding how the NASDAQ and the S&P 500 move every day. You have to get the reps in of showing up day in and day out, of watching the market open, seeing how it moves. The market will go through cycles of really crazy movement, kind of choppy movement, and then, really one directional movement. And you have to be able to learn how to adjust between those, because you'll be trading one market where your strategy might work really well, and then it'll shift and you will take a ton of losses because now you'll be trying to use your strategy in a market that doesn't really work very well. And so that's where those nuances will come in and help you become a better trader. And so a huge thing is you want to create a plan. You want to create a plan where you come into the market every day looking for a certain strategy. What really worked for me is I tried to trade multiple strategies at once, of reversals, continuation trades, short trades, big trades, multiple time frames, and it's just a lot at once. And it seems like, well, this will give me more opportunities and I'll make more money. But when it really comes to it, you need to just master one strategy. That's what's gonna make you profitable. And so you want to stick to one strategy. What works for me is looking for reversal trades every day in the first 60 to 90 minutes of pretty much the S&P 500 futures and the NASDAQ futures. And that's all I do. And I just move on with my day if nothing happens. And I'll look for these key timing reversals where the first 15 minutes of the market open, the first 30 minutes, really a lot of the time those will reverse. I'll watch news. And then also I'll watch about 90 minutes after the market opens. That's when potential key reversals happen as well. And if nothing happens then, I'll move on with my day. But I'll show up, look for those key levels where I think they could reverse and take a trade off of it. And if I don't, again, I move on with the day. That's what you really want to do with trading, is focus on one thing and wait for the market to come to you. You do not want to be reactionary to the market. I've gone through downswings where it feels like I'm being more reactionary to the market, and it causes a lot more losses. And so this jumps into another massive key when it comes to trading, is you need to journal your trades. In some ways, even though you can technically back test a strategy, it'll tell you how profitable it is. And on a demo account, you'll be able to be really profitable right away, potentially with a strategy. But when it comes to real trading, emotions are involved. You're gonna have fear that you're gonna lose money. You're gonna have greed out of how much money you think you can make. And so you have to journal what strategies and structures are working so you can refine your strategy over time. But you also need to journal your emotions that you're having, because over time, those are going to change, but they're also going to help you identify what is affecting your trading. Everyone has different emotions and negative patterns that they do that will cause them to not follow their strategy very well. A quick example is recently, for me, I saw a massive downtrend in the market and I wanted to bet that that market was going to reverse because I saw that there was a huge downtrend, and my emotions thought, well, if I can catch this whole downtrend reversing, I will get like a 5 or 6x and I'll make thousands. Instead of, I know for my strategy and observing the market over years, is that when there is enough momentum in the market, it's unlikely to reverse. And so I need to just sit out of the trade. But my emotions and impulses got the better of me, and I jumped in on a trade anyway, and it ended up losing, of course. And so what I've made is a sheet that I put on my desk every day. And what it basically has is some rules that I know that I like to commonly break. These aren't necessarily my trade entry rules of waiting for a key level, waiting for the trend to reverse, a couple patterns to show up. Those are my standard trade entry rules that I don't break because I've done them so many times over and over. But what actually I do break is I like to, like I just said, that first one, where if there's a big trend that has strong momentum that is unlikely to reverse, that means I should not be taking a trade. And so if there is that, I don't take a trade. Or if there is a strong flush, that means kind of like the market's done a final failed breakout and it's baiting people in the opposite direction. And I find that as a good signal to jump in versus jumping in on a slow bottom in the market. And then other basic things is the major trend aligned and is the ES and the NASDAQ aligned? I've realized over time is if there is a divergence between those two, it's unlikely to work out. And then after that, it's just looking at what I see as the market trends in either direction, my bias for the day, because I've realized over time that as well is my read on the market is really what my edge is. If I have a strong read, then there is a really good potential that I'm going to choose the right direction and pick a good trade. And if there isn't, and I kind of have on this day, I kind of have either marked down for a lot of those. And so that means I really shouldn't be trading, and there's a lot of choppiness. And so I did actually stay out of the market because it ended up being choppy, but I still stayed and watched the market. And so this is something that you should do too, is over time is understand what mistakes you make and bring that to your trading. That is the real key to growing your small account into a large one. This is what will make you consistently profitable over the long run. And so something I have that will really help you is a 90-day trader roadmap. It's a free downloadable guide that will give you a ton of resources, step-by-step process, more detailed on what you should be doing every day to grow and start your trading career. And if you want a good explanation of how futures work, how my trading strategy works, and market structure, check out this video right here. It'll be a full course on everything you need to know when it comes to trading.